Hi there traders, this is Steve Miley, the market chartist on behalf of FxExplained, and this is one of our regular weekly MacroWatch video productions. So here we're going to take a look at what's happened last week and also to have a little preview of what we're expecting going into next week commencing the 7th of October 2019. Well, the main event last week was the publication of the ISM Institute for Supply Management PMI Purchasing Managers Index data on both a manufacturing and non-manufacturing front. We had those on Tuesday and Thursday. Tuesday was a disastrous number, the lowest level since 2009 for the Manufacturing Purchasing Managers Index from the ISM, and that saw stock markets plunge significantly lower on Tuesday. And then again on Thursday we have the service sector data, again negative, not as bad as the manufacturing data, but nevertheless slowing, a notable slowdown from the August data, and that putting real downside pressures on the certainly downside pressures on the stock markets, on riskier assets, and really reflecting the global slowdown now impacting into the larger US economy, both on the manufacturing and non-manufacturing service sector side. And here we can see the impact on the S&P 500. Here on the second half of the week, and here you see the market selling off. This was the Tuesday sell-off, and here was the Tuesday through Thursday sell-off in here. The market really damaged in here, significantly damaged by the negative data we saw from the US. So a contagion effect, the US now being impacted by the more negative data that we're seeing coming through from the global scenario impacting into the US. Friday then saw the release of the non-farm payroll, the employment report, the US employment report, always much watched in here. The unemployment rate moved to its lowest level since 1969 at 3.5%, and wage growth rates stay very low. The non-farm payroll element was lower than the market consensus, but the market liked this report, and a little bit of a respite having had those very poor pieces of data from the ISM. So we did see stock averages both in the US and globally rebound on the back of that, but the US dollar did go lower, and the US dollar has stayed lower in here with anticipation that the Fed are going to be more dovish in here, potential for a US rate cut now growing into the end of this year. The main geopolitical event last week was the impeachment inquiry continues to gather in here, and we're seeing more risk in here for a potential impeachment of US President Trump. After the previous week at the end of September, we had the release of the phone conversation between the US president and the Ukrainian president. So all of this gathering momentum in here, and we're going to be watching this this whole area with very much in the focus for financial market participants going into this week, but also probably going to dominate now over the coming weeks and months. The other big piece of news last week was also kind of geopolitical. It came from the World Trade Organization, the WTO, and what we saw here was a ruling. It's a multi-year ruling actually that's been going on regarding tariff imposition from the US on Europe. The WTO awarding the US the ability to impose tariffs on the back of a situation regarding Airbus with European governments, and so we're going to see potential of import tariffs from the US onto European goods, including whiskey, wine and cheese, and then the real possible escalation of a trade war between the EU and the US, and that was the real main concern coming from this WTO, World Trade Organization ruling, which saw then equity markets back on Wednesday also sell off between those two negative pieces of data that we had from the ISM, the manufacturing and non-manufacturing PMI data. We also got this development from the WTO. Looking into this week in here, we haven't had really too much developments on the US-China trade war over the past 1 to 2 weeks, but they are due to resume talks going into this week, into the week commencing 7th of October, and markets clearly going to monitor those talks going forward. On the Brexit side in here, Boris Johnson has unveiled a new updated deal with a potential solution or answer to the Irish border. However, this has already been very much dismissed by the EU, by the EC, dismissing this new Brexit potential deal from the Conservative government. Finally, let's take a look to what we've got coming up going into this week. The Fed's Powell speaks on Monday, Tuesday and Wednesday, so we're watching that culminating in the FOMC minutes on Wednesday. On the data front, Monday brings German factory orders and Chinese service sector PMI alongside German industrial production and US PPI. out into Thursday, we see UK manufacturing industrial production, and probably one of the more important pieces of data for the week, the US CPI data. And then late in the week, we get Michigan consumer sentiment after we've had German CPI and the Canadian employment reports. Really, the focus this week, though, coming into this week, is going to be the resumption of the US-China trade negotiations. It's going to be on any developments with respect to the Trump impeachment inquiry. Always an eye on Brexit, and the main data points in here, US CPI and Michigan consumer sentiment. But we're going to be watching for the Fed, watching for Powell, and maybe his reaction to these key pieces of data we've had over the past week. This has been Steve Miley for FX Explained and our Macro Watch, and I'm going to wish you all a great trading week. Have a good one, guys. Bye. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.